Hello and welcome to Niaga Spotlight with me, Tehmina Kaoosji. Niaga Spotlight takes us through the week in economic analysis and future affairs. Now today on Future Affairs, Spotlight is on global risks. So geopolitics in 2026 has certainly become harder to predict, and businesses are having to navigate more pressure from more directions all at once. The Global Risk Report 2026 analyzes that shift in sharp focus, looking at the reality companies are facing right now with geopolitics, climate disruptions, strained infrastructure, and fast-moving technology. Risk has thus moved to the core of everyday decision-making. Now, this report draws on rich insights from more than 1,300 experts and over 11,000 business leaders across 116 economies. And the takeaway is clear. Instability is not occasional. It is actually becoming part of the operating landscape for business. So for Malaysia, as a country, an economy built on trade, regional supply chain fundamentals, the real challenge is how businesses will stay strong when these shocks overlap: economic, environmental, and digital. And of course, resilience has to become something which is not only meticulously planned for, but also costed for. Joining me now in the studios for this most interesting discussion, and timely one too, is Teresa Wong, Chief Risk Officer at the General Segment and Head of Sustainability Risk at Zurich, Malaysia, to help us understand what 2026 demands and how companies can prepare for what comes next. A very good morning to you, Teresa. Thank you for making time.
Good morning, Tehmina, and it's my pleasure to join you here.
Teresa, so it's a really timely moment to have a look at risk shift for businesses and what it's going to look like for the rest of 2026. So tell us a little bit more about, of course, the report itself and the top risk shift that businesses are looking at for 2026.
Yeah, so the Global Risk Report that came out recently, I think it's very timely as it comes out in the first quarter of the year. And it focuses everyone on what are the risks assailing us in the course of our ordinary lives, as well as, from a business perspective and corporate organizations. We really need to see what we need to look at risk as risk for the future. So far as strategic terms are concerned, we need to plan for the future because we need to be resilient businesses in order to support our local economies as well, right?
Absolutely.
I think the key shifts in the 2026 Global Risk Report is the growing interconnectedness of risk. We no longer look for isolated threats or just incidents that happen
Or sectoral vulnerability.
Yes, correct.
Right? Yeah.
So it's a combination of risks that reinforce each other. So for instance, geo-economic confrontation is certainly at the forefront now, but the ripple effects that emanate from these disruptions, right, to supply chains, economic instability that businesses must brace themselves for. For Malaysian companies, this interconnectedness nature of risk holds a particular significance as its highly open economy. Malaysia is especially susceptible to global shocks, which can manifest rapidly through trade disruptions. Insofar as shifts in labor markets, maybe even fluctuations in investments, as we can see markets yo-yo up and down.
That's right.
And then you suddenly, it's a systemic problem, right? You feel that. So my advice to businesses is to move beyond the normal assessment of individual risks, which they are so totally focused on a daily basis, right?
Sure.
And adopt a more comprehensive perspective, one that considers how various risks may interact and also potentially cascade throughout their organizations. So this preparedness basically is what businesses should adopt in a more human-centric manner. Combine a scenario-based approach and then explore how people and operations can also be affected and make sure that when that occurs, they are resilient enough to brace themselves and also make sure that they continue to be in operations.
Right.
So,
Thank you, Teresa, for the insights so far. We take a very brief break and we'll be right back after that. Stay tuned for the rest of the interview looking at global risks in 2026 and beyond. Welcome back to Niaga Spotlight. Still with me, Tehmina Kaoosji, and getting right back into the conversation with Teresa Wong of Zurich, Malaysia. So, Teresa, as you were mentioning, risk is no longer individual, it's multiple, it's cascading, and I think we cannot desist from speaking about the fact that the wider geoeconomic risks are, of course, around tariffs, sanctions, and also strategic competition. So how is this already showing up in corporate risk decisions from the very deep insights that come out of the report?
truly, tariffs was like on everyone's lips.
Sure, an entire year plus, right?
Correct. And in today's landscape, basically geoeconomic tensions, they are significantly impacting corporate decision making. So companies become more and more cautious, not because they are risk averse, but basically because the cost of making a wrong decision has
Multiplied seriously.
ramifications. Risk and compliance considerations are moving upstream instead of reacting to issues after they arise. And firms now embed risk into checkpoints where the decisions they make, are they applicable to the moment, and also what decisions they need to make for the future. This involves additional reviews, documentation, which is very, very important because of audit trails, and approvals as part of the business as usual. I think the supply chain continuity is also a very key strategic consideration for Malaysian businesses now, in particular paying more attention to supply chain risks and the exposure to disruptions beyond immediate control. This is especially due to Malaysia's economic profile, where disruptions in key supply chains are a top concern.
Absolutely.
So companies are becoming more selective about long-term commitments and partnerships. They're re-evaluating their investments, their exposures to risk, and flexibility and optional decisions are increasingly valued alongside the cost, efficiency, and because companies basically want to seek resilience in uncertain environments. The interconnected nature of this risk will develop and evolve into a change. For instance, changes in sourcing, which affect cost structures, which also in turn impacts pricing considerations and ultimately employment decisions. These cascading effects highlight how geoeconomic risks are intertwined with broader business strategies.
Exactly. So perhaps if at this point, I think it's important if you could perhaps help us to highlight what kind of blind spots are you predicting or seeing amongst Malaysian firms that may still be assuming that trade flows will remain quite frictionless. No longer a truism though, right?
True. Malaysian businesses, they assume that they are insulated from trade disruptions, but the reality is that risk across industries and even within sectors is coming up, right? While manufacturing and export-oriented firms may feel the immediate effects, so local businesses that produce for local consumption,
Right.
they may feel that they are insulated against that. But the reality is there are a lot of manufacturers who produce in the supply chain.
Yes, your source materials.
Yes, to export. And because of that, they need to make sure that they comply. For example, climate and sustainability, when you export to the EU, so if you're not a direct exporter, you say, I'm insulated. But basically, that's not true. Because when you supply to a multinational that exports to the EU or US or even the UK, there are many regulations and requirements that will disrupt your supply.
Or that at least have to be considered, even
Correct.
if it's supposedly a pretty smooth sailing quarter, right?
Right.
Yeah.
And that would bring a lot of disruptions to your predicted or assumed revenue or projected revenue for the year, and therein lies the issues for challenges. So these upstream suppliers, they've got higher costs and also, data reporting pressures because of ESG requirements. And key mistakes that companies make is assuming ESG as a reporting criteria rather than benefiting from it by ensuring that you could lower GHG emissions because you've implemented ESG into your manufacturing operations.
Or even perhaps improve reputational management as well, since you are known for delivering.
Yes, and in order to stay resilient, companies should expand their view of the supply chain risk and embrace transparency. So reliability and flexibility to adapt is paramount.
Yeah, absolutely. And so moving in from there into the fact that financial strain and corporate resilience are perhaps the largest intersection that we will be experiencing over 2026. Teresa, tell us about basically what stress points are of biggest concern when it comes to Malaysian balance sheets.
Basically, financial strain isn't just caused by a single factor. It depends on how exposed a business is to the interconnectedness of the global economy, for which the GRR, the Global Risk Report, has highlighted there's so much interconnectivity that it should not be overlooked. And the pressure often doesn't come as an immediate shock, but rather in gradual shifts that will eat away a company's ability to adapt. So in this environment, the main concern isn't one specific item on the line within the balance sheet, but whether a company has enough flexibility to adjust to changing conditions without jeopardizing long-term stability. The companies that rely on stable assumptions, they're often the first to feel the strain, right? But those with buffers and clear visibility tend to manage disruptions more effectively. And resilience today basically is about adapting to multiple pressures at the one point, not avoiding them altogether, but being able to pivot and respond quickly when volatility and uncertainty arise from multiple disruptions.
Exactly. Now, it was also quite interesting to look a little deeper when I had a look at the report's economic reckoning, which was based around 3 simultaneous pressures. So particularly for balance sheets, it talked about high debt refinancing needs, asset price or even industrial bubbles, and also the risk of boomerang inflation. It was also interesting that the report was bold and very articulate in predicting a possible worst case scenario, which might be global tariff imposition, right? So this would, of course, completely change the operating landscape for any business, regardless of whether you are a larger partner, a smaller partner, or otherwise. Yeah. All right. So, Teresa, from there moving into having a look at climate and infrastructure risk. So, climate and infrastructure risk is now a lot more immediate. We have actually seen a lot more floods occurring, all the way to, if it's not floods, we also have heat stress involved. So how is Zurich seeing physical climate risk shift from long-term to more of an ongoing operational issue?
So physical climate risks are very quickly felt. For instance, like the floods that assail us. I think, and in particular, the December 2021 floods, we had a huge loss. More than 6 billion losses, but we discovered that the economic losses were not totally insured. And this brings a call to consumers on the ground to be more aware that they should be looking to insurance as a risk transfer, as well as mitigating their own balance sheets as well, the portfolio and the profitability of their businesses. And only 1/3 of that 6 billion was insured.
All right, so that is a staggering amount
very,
to
very
be cognizant
staggering.
of. And also considering the fact that the floods that occurred in December last year, not too long ago, we also had repeated escalating patterns since about 2021 onwards, right?
Correct. So from the perspective of an insurer, and why we should be aware and support our customers. Every time floods affect their livelihoods, and a business continuity plan from within ourselves as well as to support customers are also very important. So the speed of the response rate, particularly when customers are affected by floods. So we do have flood support where basically the flood claims are tackled at the ground level, right? So this is to alleviate the financial assistance that customers would need on the ground, and this is through our flood aid trucks.
And I think what's most important now perhaps is that reframing climate risk all the way from heat stress to flood damage outside of the usual paradigm, which is that this is only something which especially impacts rural or non-urban areas. Zurich's findings, of course, center more around the urban landscape, right?
Yes, so from a perspective of how we view flood, it's not just in the rural areas, but there are also urban vulnerable communities. And together with the Zurich Foundation as a group, we have an urban climate resilience program where we focus on local initiatives on the ground level with these communities. So we support 2 communities in Kuala Lumpur, and also another 2 communities in Malacca, namely the PPR Beringin and Kampung Pasir in Kuala Lumpur, and Kampung Morten and Beringin in Malacca. So from these programs, when a climate assessment is conducted, we start with focus groups and actually go to the grassroots levels to understand what are the pain points that these communities encounter when they have not just floods but also heat waves.
Fair enough, because sometimes it actually happens simultaneously back to back, perhaps even within a 1-month cycle, right?
Correct, where heat stress is so severe that
it causes
the elderly cannot sleep, and that will ensue with a whole host of other issues. So the initiatives that we moved for and put forward basically help to strengthen resilience in communities and adapting to both heat stress as well as flood.
Absolutely. So thanks very much for sharing with us a little more about the on-ground work that is happening, which is of incredible value to local communities. But moving now, Teresa, into looking at critical infrastructure and the connection to business continuity. So tell us a little more around perspectives for infrastructure disruptions, which can also be occurring. We're talking about multiples, we're talking about weather, even cyber spillovers, logistics breakdown. What could a credible resilience plan look like for organizations out there?
Very key to resilience is communication, and that should cut across all functions within an organization, not just isolated to the resilience manager or the business continuity manager. Because when disruptions occur, whether it's from weather events, cyber spillovers, or logistic breakdowns, the resilience framework must be solid and activated in a way that is grounded in operational needs, not just something you put on pen and paper and then file it away and then dust it now and then, but basically
a living document of sorts.
Yes, it should be a living document, and then it must have a realistic understanding how disruptions will happen. So we do business disruption testing,
stress testing
as well, and our internal guidance allows us to recognize that weather events can not just affect only ourselves but also our customers. And this is from the perspective of operations, where say a flood occurs near our branches and customers cannot go to the branch to do their transactions or make their claims, right? So, and cyber spillovers can also disrupt connectivity to our core partners who cannot provide the service to customers, right? And insofar as logistic or infrastructure breakdown, they can affect our claim servicing, just like I mentioned earlier on about why we have the flood aid trucks to support victims of
During
flood
the
who are our
emergencies.
customers. Yes, yes.
So it's also very interesting, Teresa, that you mention and emphasize stress testing, quite similar to, let's say, a fire drill. So I'm sure every organization, they're on board with that side of it. But how do we normalize the mentality that you also need to stress test your resilience plans for businesses out there? What would be your message to them?
Very truly, you need to make sure you have backup plans.
Okay.
Right? So a very resilient infrastructure, insofar as systems concerned, enables you to carry on business as usual. And a very good example of that was during COVID-19, where we could mobilize all staff to work from home because we had a strong infrastructure, equipped them with laptops, and only essential services were in the office basically. But there was continuity of business. So it chives into why a business continuity plan should be resilient enough to withstand that.
Non-negotiable,
yes,
right?
And you see the whole world evolving to borderless communications, right? You do not even need to fly anywhere, reduce your carbon footprint, but you can have a very decent conversation online with video, etc., which was not possible for the multitudes 10 years ago.
Absolutely.
Yes.
So from there, of course, speaking about online, where do you expect now from the online sphere, cyber risk has also evolved into AI-driven risk. So where do you expect AI-driven risk to be hitting Malaysian businesses first, and what ought we to be preparing for in the year ahead?
AI risk comes because we all want to improve ourselves. And
Faster,
the brain's always
stronger,
thinking, trying to come up with new innovations. And from that perspective, it's got a lot to do with trust, right? You trust the system, you move with the system, and you should be okay, right? But you see today, scams are happening because of the trust factor. And therefore, it's very vital that every consumer out there should be aware of what AI can help them with and what they should not do, like click on the link, because the automatic reaction is, please click on the link, and you just follow, you know?
Follow almost blindly.
Right,
Yes.
right. And they know to choose the rhythm of your makeup during the day, to target maybe during lunch hour, or you are in a rush and then you just click and that's it, fallen prey to a scam, right?
Exactly.
But AI is here to help support us to move things faster for the future. It should be embraced and should not be thought of as, you know, this great...
Something to avoid.
Yes.
Yeah, just because
great
of the
black
risks.
hole to avoid because you feel that there are risks. What is very important is to understand what is behind the AI. That's very important. For Malaysian businesses, governing AI use is very important. Should not avoid it. We should not avoid it. We should be accountable, and human oversight verification of processes must not give way to immediacy. Like you want to be more efficient and you see a message from your boss and immediately you click on it, that's it, done. So the human thought process, which goes into verifying whether it's truly your boss or not, that is important.
Exactly.
Yes.
So what this is actually speaking keenly of is, as you mentioned, everyone is exposed to this, be it in our work lives or in our personal day-to-day lives. It is evolving more as a multi-generational digital, financial and media literacy challenge, because this could be affecting someone who has just started off in their work years, or even teenagers who may already be transacting online and purchasing things, all the way up to retirees and those in their working age. So risk clearly is so much more contextual and connected overall. Perhaps to land the conversation, Teresa, what would be your final risk preparation message to businesses, organizations out there for 2026?
Firms investing in awareness, governance and early response capabilities is very vital, and it will be better positioned to navigate and manage AI-driven risks, because technology is not going to fail to go backwards. It will not retrograde. It will just move forward, and at a faster pace than any one of us can imagine, right? So in everyday operations, we encounter AI, and firms should embrace that as part of a more efficient-driven process for the future.
All right. Thank you very much for the conversation today, Teresa. And ending off, risk today is about how quickly the world is changing around us while dealing with these polycrises. The businesses that will endure are the ones that stay alert, are able to adapt early, and also treat preparedness as part of business and operational strategy. My thanks to Teresa Wong of Zurich, Malaysia, for joining us today. That's all we have time for. Join us next week for more economic analysis and insights. I'm Tehmina Kaoosji, signing off for now.